But shifting focus, today the market bulk of the heavy lifting is being done by banks, private sector, and SBI, of course, is giving company. And market overall seemed to be showing kind of a breakout move. Somebody who actually spotted that quite early is Sanjiv Bhasin, who is joining us today on the show after a long time, at least on my show. Sanjiv, good afternoon. How are you reading the Bank Nifty's move? And it's an under-owned, underappreciated space, but banking is doing very well right now.
Yeah, good afternoon, Ajay, and wish you and all the viewers a very, very happy Navratri and Jai Mataji. We think this is the turning cusp of a market, where industrials, which we started with banks, cement, all underperformed. But now is the time. China GDP has 4.9. Cost of money at the lowest in, I think, 10 years, and bond yields raring to go. India has never been in a sweeter spot given the overlap of COVID. You've had, oil at below $35. You've got bond yields. The government's current account surplus is plus. And, these Chinese imports are again banned. So this is the time for State Bank, ICICI, Tata Steel, Ultratech, and L&T to start to shine. And I can make no bones about it. Bank Nifty underperformance is over. Look at the results from HDFC. Look at the other income. Look at a small bank like Federal Bank. After making a provisioning of 400 crore, they came out with sterling other income and net interest margins because of the cost of money being low at a record high. So I think this is now the time market has, shifted its focus from the men from the boys. And I think this is the outperformance of banks, which is now just starting to get up. So time to book profit in your auto, IT and pharma and concentrate on banks, cement, infrastructure like L&T. All this play on power is gathering even more traction. Power consumption levels are more than pre-COVID. And with power utilization, infrastructure is going to be the key. And there are no Chinese imports now. So it's all about L&T, BHEL being re-rated on a next two-year basis.
Sanjiv, banking was a drag for the market, and market had kind of gone in a bit of a sideways movement last 1.5 to 2 months. Reliance also kind of had moved to 2400 and came back and stalled. Does it show that this banking pack contribution coming back, the entire market could be headed to a new high? Is that a possibility in the near term?
Well, to stick my neck out, I think Diwali will see 12,000 and above. Now, whether we go to 12,250 or 12,400, I don't know. But I am very sure we are headed towards 12,000. A. B. The only, joker in the pack being the US elections, but that is more rhetoric. In the end, Ajay, you have never seen such type of consumption fever just to play out on the festive season, which is playing out. This Sunday, I went to purchase a new refrigerator. And you can't believe the consumer electrical shops were chock-a-block. You were in a waiting list. So I think this whole bonhomie of no cash, etc. is all outplaced. I think banks have shown you that they raised capital at a time when they needed to, and that cost of money being so low, you can't lose money. Look at the type of valuations you're getting on some of the banks, 0.6 time price to book. So I am very sure this is now the time of the old industrial diehards. Like I said, State Bank, ICICI, Tata Steel, Ultratech, L&T, this is the time they're going to. So I don't rule out a 20% upside on this sector. And Ajay, this was the sector which was lagging. It was Reliance and IT, which was a bellwether which took you to 12,000. This time you will go beyond 12,000 on the back of Bank Nifty going to 26,000. That is what my call is.
Sanjiv, very quickly, last time we were having this offline chat and you were saying that market has gone into some kind of a sideways correction and times are about to change and the stars for the market will change very soon. Are those alignments happening now? What's your view on a 2-year basis for the market?
2 years, if I give you target, Ajay, you and me will keep laughing our way. So I don't rule out 18 to 20,000 on the Nifty in 2 years. I think this is the sweetest spot India has ever been in. and we weathered this storm well. Our whole capex or our stimulus has been missing. We've been conserving cash. Our FX reserves are at the highest, and we didn't even feel the need to come and give you stimulus like the other countries are. So I think there is a lot the government can do, and they're waiting for COVID to plateau out. As you are reading the news, you are reading the leaves. COVID is there is a government forecast which says by February the decline will be very, very sharp. So ignore the rhetoric. This is the time to put your money where your mouth is. I think equities as an outperforming index or an asset class is there for the next 3 years. And by the way, India is going to be leading the emerging markets from the front.
Wow. On that, well, Sanjiv, on that wonderful and positive note, thank you so much for joining us today. That was Sanjiv Bhasin of IIFL Securities, sounding very positive on the market. But in the near term, he did mention there's an event risk which lies ahead, and that is US elections. My colleague Jayesh has done some research at data points around it. Jayesh, what are you reading?